CEO of Datascan, Brian Koprowski. BK, welcome to the show. If we've got you, I
Today's
don't think they
a,
gave
today's
me
a
the.
special. There you go.
There you go, BK. How are you doing?
He's muted.
And he's still muted.
Wait,
There we go.
how are you, Brian?
I'm good. I'm not in the middle of Washington. I'm in Alpharetta, Georgia. So just excited to have a good, hopefully stable connection here with you guys.
Yeah.
So, Sam,
I
last
love it.
time I was with Brian, and the first time I was with Brian, it happened to be at a rodeo. So that's a
Oh,
long story. That's actually not that long. Datascan put on an event, and we were there, and it was pretty exciting. So, Brian is he's impressive. He knows how to really make a strong appearance with the horses and stuff. And that was quite the experience.
so
You-
Yossi, you can't drop that bit of knowledge without saying how many seconds for you or BK. How did this
Not
go? How many
It
seconds?
wasn't for me, although
Oh,
I did do that
which I
whatever
do
it's
have
called.
video of, by the way. I have video of you on the mechanical bull. So if anybody
I
wants,
love it. The
happy to
mechanical
share.
bull, that's what it
I love it.
was.
I love it.
Brian,
Well,
kick us off with you're well ingrained into. I'll let you explain what Datascan does, but you're well ingrained into to the lender side of our business, the floor plans, you're right, like I would say the intersection of the dealers interacting with the lenders and the floor plans. Can you just kick us off with just what you do, and I'd like to get to a little bit of like a state of the union of what you're seeing on that in that world, but just kick us off a little bit about what you actually do there.
Yeah, so Datascan's been around for over 35 years. We're the industry leader in floor plan accounting systems and floor plan auditing services. So for certainly Sam and any of the listeners out there, dealerships, they probably ran across our team. We've got over 300 folks in the field in the U.S. and Canada performing floor plan audits. Our system is managing over $100 billion worth of automotive collateral today, and a little over 2 million units on the system. So we've got some pretty good size and scale, and we've been really focused on how do we help the industry as a whole versus just each unique lender with their kind of management of their floor plan operations.
Brian, how can it be that it's 2025 and there's still manual audits happening on dealer lots? I feel like that should not be happening. A floor plan audit, right? We've all experienced it, unless you own all your inventory at your respective dealership and have no floor plan whatsoever. How can that be?
It's because we have a lot of disconnected data. The data does exist; it's out there. We know that. You've got retail data that comes in across the industry. It's generally all the same floor plan lenders are doing retail loans, whether they're captives or banks, right? But they're not all doing them for the same dealers, and dealers obviously have to have multiple retail options for their various customer profiles. And so those systems are not connected. Our systems are generally not connected with DMS systems. So getting the access, though, they are relying on us to go out and conduct a floor plan audit what the collateral position is at the dealership. And we're trying to change that with our new risk age product. Data, as I mentioned, from a retail perspective, would be huge from a lender perspective to understand what units are sold. That's where they have the risk, right? Units sold and not paid. To know that without us having to go out and do an audit would be great. Today, a lender generally flies blind from audit to audit, so they know generally things are getting paid off and things are getting floored, but they don't know, are they getting paid off on time? Are they getting paid off out of trust? How late are they? What are the payoff trends? All the data they look at on the back end to manage risk has been really just focuses from audit to audit. And we're trying to change that to make it more data driven so that when somebody does show up to do a floor plan audit, it's because there's either a reason or they want to kick the tires once a year, right? Just make sure everything's good.
Mhm.
But we believe the data that even when we do show up can significantly reduce the impact in the amount of time that we have to spend at a location, looking through deal jackets, bothering the accounting staff, doing all the things that nobody likes to do on a floor plan audit. We believe we can kind of flip that on its
Mhm.
head and really just be more focused on where we actually have risk.
how does
Now,
that work?
go ahead,
Oh,
Sam.
go ahead. How does that work practically? So, where does your system reside, and then what type of info? So, I'm in an office. I've got units in, units out. I've got vehicles sitting on a lot. Like, what does your system do to help simplify that from a practical standpoint?
Yeah. So the goal going forward is we're kind of pulling the retail data together from across the industry, and we're using that to say, okay, if you're with lender A on the retail side, but your floor plans with lender B, how can we notify that, even flip the system, right, that the unit has been sold. So today there's a lot of double entering of data going on. You're doing double entry in your DMS system. You're likely logging into our system, or another floor plan lender system to pay off that unit. Generally, the flooring's pretty simple. On new units, we're generally connected directly with the OEM, so it just flows directly to the floor plan. Obviously, used units, trade-ins, those are all getting keyed in manually. If we can figure out ways to leverage the data and interact, maybe connect our system with a DMS system, right? So that the data and the transaction flows through as it happens. So your staff on the back end is not having to double enter that and figure out what's being floored, when it needs to go in, when it needs to get paid off. A lot of that can be automated if the systems
So
are connected.
so a lot of this data is available. It's not necessarily automated, but it's available today. What's keeping most dealers from using the data effectively? Is it the fact that it is manual and it's not automated, or is it just not readily accessible or available, or what's the unique piece that you have that's able to bring all that together?
I think the unique piece we bring is the scale, right? We've got, pretty large market shares, certainly in auto, but obviously other asset types as well. But I think bringing our clients together to come up with industry level solutions that everybody wins from, the floor plan lender, the retail lender, as well as dealers. We've been out meeting with a bunch of dealers about back office operations, and everybody focuses on the front end and sales, right? But the back
Yeah.
office operations process is fairly manual. A couple dealers we went to, they had a full-time person literally just reconciling retail payments with deposits in the bank account. And those are things that we have the retail transactions, we have the information on the floor plan and the vehicles. We can pull that together and make everybody's life a little bit easier.
Hey, Brian, what's the pulse on the market right now? Given you have all this exposure, right, to floor plan lenders and dealers and the recipients of that capital, like what is right now? Where are we? Just August 2025. What's just the overall pulse?
I mean, I would say, what we really track is kind of the inventories on the ground, because we have, over 2 million units on the system. We get a pretty good sense of where the market's going. We've seen a lot of activity up and down over the last 6 to 8 weeks as the tariff, you know, news changes on a minute by minute basis. Units several weeks dipped pretty significantly, and they would go up for a couple weeks and dip. So we've been wobbling for the last 6 to 8 weeks on inventory levels. We haven't really seen an increase. We are projecting an increase the second half of the year. I believe we saw a few articles where they were expecting production in the second half of the year to be about 400,000 units higher than the first half of the year out of North America. So hopefully, as units will start to flow back into dealerships pretty consistently now that most of the
What?
major deals are done.
Yeah, what's driving that? When you say additional units in the latter part of the year,
I
like why?
believe,
Why? Yeah.
yeah, everything we heard was, manufacturers were holding up on production, trying to figure out the tariff impact, the parts pricing,
Mhm.
factory. There was a little bit of a delay. There always is around the 4th of July. I think a lot of factories are shut down over that period, but I think a lot of OEMs are trying to figure out what their go forward plan was related to tariffs and pricing.
Mhm. Yeah, I figured that. All right. Sam, I mean,
So
if you,
so you
go ahead.
yeah, I was just gonna ask, so you guys have a newer product called Risk Gauge. Tell us a little bit about that, what it does, how it benefits.
Yeah,
What's
so
that
RiskGauge
product?
is our new risk management platform. As I mentioned, historically, we've done physical audits, turned that data over to the lenders. They work with the dealers to resolve the audit and manage their risk management practices going forward in some other system. What we're trying to do is, again, as I mentioned earlier, leverage the data, bring it into the RiskGauge platform so that a lender and potentially a dealer has more continuous monitoring on what's on their floor plan, what's in, what's out, where they have exposure. That we know there's a lot of really good quality dealers that are probably getting audited more frequently than they need to be. but it is because there's not a consistent flow of data to the floor plan lender. And so, banks are regulated by the OCC, so they have different parameters than the captives. And so, a good captive, with a good credit quality dealer, they might only go in there once or twice a year anyway. But where a bank might be going in once a month, even once a quarter at a minimum. So,
So
uh, go ahead.
so is it dealers that are asking for this, or is it the lenders that are asking for this? Because it does seem like it's gonna create more transparency in a dealer operations, right? Which is good for the dealer because it reduces inefficiencies and makes flow better, but it also speeds up that process, right? There's no delay time between, let's say, payoff and paying off your floor plan. To your point, right? It increases transparency. So is it the dealer who's asking for it, or the lender, typically the floor plan carrier?
I would say this started a few years ago with some of our lenders. Everybody's really looking for ways to reduce their risk management costs, right? So, how can I
Yeah,
reduce the amount of physical audits I'm doing? It's a big number on their P&L from a lender perspective. We're a big part of that, but clearly
yeah,
we're trying to disrupt ourselves and help reduce that cost. Because for us, it's expensive, right? You got to say, and we've
yeah.
got, as I mentioned, 300 people in the U.S. and Canada going out to 6 to 8,000 dealerships a month. I mean, it's not the cost of labor does not go down. So
Yeah.
this becomes more and more expensive. So we've got to figure out a better way to do it.
That and by the way, so Sam, when I was with Brian in person, that was one of the questions I asked him. I said, number one, I respect the fact that as a someone that literally performs audits and they are building something to disrupt themselves. That's like the
Yeah.
classic innovator's dilemma. And you know, it takes a certain type of culture to do that, right? Because it's just remember, you're literally disrupting yourself. And if you don't do it, someone else will do it. The second question I asked Brian was we were sitting with one of the gentlemen that manages the auditing team. And I said, how are you communicating this internally? I said, because you literally have hundreds of auditors. And they started explaining this to me. And I thought, his response was fair. It was like, listen, this is not going to go away completely, clearly, but there will be a future with a smaller team, and it's going to take time, right? It's not like tomorrow it's going to happen. So, I thought that was a good conversation. And Brian, if you remember, I did have one more question I asked you at that when we were eating lunch, and that was, I said, is there a way to create some value for the dealers to create some relationship where you have access to all this data? And I don't exactly know what that value is, but being in your position, having all the inventory analytics, it just came to mind and said, how can this be more value add for the dealers as opposed to like, viewing, inventory auditing stuff. I mean, it's very mundane. It feels like it's like a cost center, right? It's an expense. You just got to do it. But like there's data there. Can that data be, for example, shared with maybe specific other lenders and stuff to get more favorable rates, right? Like this is a low risk dealer. I don't even know, but I'm just thinking like everything in our economy has been atomized, right? Look at like car insurance, right? You have companies that will literally charge you by the mile, right? Everything has become atomized. So naturally, where my brain went was like, is there some opportunity here when you had asked me like, what can be done to better support the industry? So, anyways, that's me getting back to our conversation, and hopefully I didn't butcher that. But that's what I remember we discussed.
Yeah, and it's an interesting concept. We did talk about like whether it's a standardized risk score across dealers from a floor
That's a
plan
good way to put
perspective, right?
it.
So could we've got enough data, we've got enough history. Could you score a dealer very consistently? Now every lender looks at their risk scorecard very differently. They all have different metrics. They all have different ratings. They weight things differently. But we could do it across the industry with one standard score. Think of it as a DNB rating, right? You used to get a Paydex rating
Mhm.
for how companies paid their bills, and people would look at that when they were evaluating whether they wanted to take on a company. You could do a very similar thing where, hey, I've scored a 4.5 out of 5 on the Datascan risk score, and to your point, does that drive down their rate? Could they shop their floor plan business based on that? Could it give the dealer a little bit of an advantage to go out to the market and get a little better rate? And again, if we're leveraging all the digital because again, some of this data, if we're going to get access to some DMS data, the dealer's going to have to raise his hand and agree to it, right? We
Yeah.
can't just go grab it. So there's going to have to be benefit for the dealer in this process. So yeah, that's one of the things we're working on right now with the lenders, is trying to put together a advisory council on how do we figure out the benefit to retail lenders, floor plan lenders, and dealers.
Mhm.
Yeah. Final question for, as we wrap up here, a question from social media. DNC asks, how do you envision, and you answered a little bit of this, how do you envision AI impacting floor plan audits, whether on the mobile device out in the field or with software assisting with the reconciliation process? BK.
Thinking about that for a second. It's a great, because it was a great topic. You guys mentioned it earlier. We've been
Yeah.
very, because of the nature of what we do, we've been very cautious about how we use AI and how we approach AI topics. A lot of our customers, are, kind of restricting the usage of AI. But what we've done internally, you guys brought up Chat GBT. Our InfoSec and compliance team has done a great job in our IT group about looking for ways to leverage those tools, but behind our corporate Microsoft accounts, so that you still have access to, whether it's Copilot or you can tie in Chat GPT, but it's going through your corporate log and you're not paying the $20 as an individual sending
Hmm.
stuff out on your own account. So we figured out ways to leverage those AI tools, but we think there's some impact with ML models once we get the data in there, that we can start driving really what I would say more predictive risk analytics for lenders, potentially for dealers. We've talked about, cash management processes. AI could be used to match up deposits and reconcile those with retail sales transactions. So there's a lot of different ways we can leverage AI going forward. But it's probably more about being predictive about when you go up and what are you going to look at when you actually show up to do an audit.
Mhm.
So we're not touching everything.
Interesting
Yeah.
perspective. Yeah, interesting perspective. Uh, I got to throw this out. Just putting your financial statement, Chat GPT, good idea, bad idea, interesting. What's your take on that?
Phenomenal idea.
I love it.
I would say bad
We'll give you
idea, but yeah, that's on the
Uh,
until
public one.
until
But
you have the firewall. Yeah, yeah. Until you have
yeah,
the firewall, you
exactly,
figure out how to make it
exactly.
private.
uh,
All right, Brian Koprowski, BK, CEO of Datascan. Thanks for coming on the show to share your perspectives on all things floor
Thanks,
plan and
Brian.
data. Thank you.
Awesome, guys. Been a pleasure. Thank you. Have a good one.